Happy to be with you again. Last week, we considered tourism feasibility study. Today, we shall be discussing tourism feasibility reports. Our course remains tourism design and feasibility, and I am your humble presenter, Olukemi Fagbolu. Next feasibility reports. We should know that feasibility study, whenever it's conducted, must be presented in a report in order to assist tourism investment decision makers. It will guide them in order to identify and discover how viable and how feasible the project is going to be. With the help of the study and the reports, they'll be able to make a very good decision when it has to do with investment. At the end of this presentation, you should be able to understand what tourism business feasibility report is all about, the element it contains, and be able to write a good feasibility report for the success of a particular tourism business venture or business ventures, as the case may be. A tourism investment feasibility report is a document that showcases whether a tourism business plan will fail or succeed. If the report indicates failure, then have to go back to the drawing board, conduct another feasibility study in order to ascertain how successful that business is going to be. If the feasibility report is gearing towards failure, that means there is no need of testing that project because any investment made might be a complete loss. Let us consider this class activity 1. Good. Features of a tourism project feasibility report. A feasibility report contains many elements, and among them are the products, the market for the product, the team, the production process and the production plan, the marketing plan, manpower requirements, capital expenditure and working capital forecast, cash budgets, projected income and balance sheet, as well as profitability analysis and project evaluation. We shall be considering all these elements one by one. The product gives a brief and detailed description of the type and nature of the tourism business. For instance, if it is accommodation business, this could be serviced or non-serviced. So in the description, we will be describing that this business is a serviced accommodation business or non-serviced accommodation business. Then we can also add the facilities that can be provided during that business. market for the products. This is all about the nature and size of the target market for the proposed products. In the process, the information collected will consist of estimates of the total size of the market and share of the market. There is a particular calculation for this based on projection, and when you calculate this market share, you have estimated market for the products and also number of the competitors in the sector. For example, let's say there are 50,000 visitors in a particular environment when the business is going to be running. And we assume that at least a tourist or a visitor, a customer will spend minimum amount of 200 naira. And let us assume that there are 5 competitors in that locality, including you, an investor. Now, how do we arrive at our market for the product is calculated thus: annual expenditure multiplied by number of visitors. That is 200 naira as our annual expenditure, then 50,000 number of tourists or visitors. If we multiply the two, then we have 10 million naira. To now arrive at the market share per each of the competitors, we divide 10 million naira by number of our estimated competitor in that environment. And from our illustration, it is 5. So 10 million naira by 5 will now be 2 million naira. That is, each of the competitors, including you there, will be able to have 2 million naira at the end of a particular business period in that environment. Now, the management team. This is a brief but sufficient description of the background and experience of the persons who will manage the enterprise. That is, the manager, the supervisor, the technical teams, and all the rest of them. Under this section, the responsibilities, the duties, qualifications, experience of each of the management team members will be composed and presented under this section. Production process and the production plan. This will describe how to make the product available. It will also describe the stages to observe during the production. Then it will also contain project costs, the relevant estimate like sales, purchases, operating expenses, and so on. And under this production process and the production plan, that is where we are going to have what we call standard operating procedures. Marketing plan. The marketing plan will showcase how we are going to achieve our sales targets. It will include our marketing goals and objectives. Under marketing plan, we'll map out strategies on how to achieve our sales targets, how to reach our target market, how to cover our areas. This will portray manpower requirements. Is it one, two, three, four, five? This will depend on the nature and size of the business that we are venturing into. It will also display the kind and number of personnel the business will need and their benefits in terms of wages, salaries, uh, allowances, welfare package, bonus, and so on and so forth. One is estimated capital expenditure. Of course, when we talk of capital expenditure, we are talking about those items that we are buying and they will tie money or fund or capital down for a long time and they do not turn over into cash fast enough but take several years to return their cash outlay, that is money spent on them. So this one of the items under capital expenditure can be plants and machinery. Others can be transportation equipment, superstructure, especially buses, coaches, recreation equipment, office furniture and fittings, and so on and so forth. Working capital. These amounts of cash necessary to cover anticipated expenditure before revenue begins flowing. Expected payment for labor, utilities, supplies, and other expenses. Inventory requirements such as raw material costs. Budget. It is in a way planning for your working capital. The cash budget is an estimate of your cash receipts and cash payments, that is, cash inflow and cash outflow. For instance, estimated total cash receipts less estimated total cash payments will give us what? Cash balance. Cash budget can be prepared for a month, it can be for a quarter, it can be for 1 year maximum. Statement. It is the summary of estimated operating expenses and operating revenue. Projected income statement will give us the idea of net profit or loss, as the case may be. Projected balance sheet. Balance sheet is a summary of assets and liability of any business and is also applicable to us in the tourism industry when we are talking of tourism business. Balance sheets in our sector will also contain fixed assets, current assets, liabilities, and current liability. When you talk of fixed assets, we are talking of capital equipment such as buses, machineries, superstructure, office furniture and fittings, generator, and what have you. The undercurrent assets, that's where we are going to have our working capital, cash inflow, inventory, and so on and so forth. The under liabilities, of course, we are going to have the capital for the business, and other current liabilities. Still under projected balance sheet, our cash on hand, we do have cash on hand and cash at bank if we are banking our business with a particular bank, or it might be many banks. This will determine deduction of total assets from liability. That is, to deduct, when we want to arrive at cash on hand, we deduct total assets from total liabilities. You know, assets we can say, such as cash on hand, inventories, cash at bank, and so on. Then under liability, we might have short-term loans and so on. So by the time we deduct total liabilities from total assets, you know, we're having fixed assets and current assets. Then total liabilities, we are having fixed assets and current assets. So when we deduct total liability, when we deduct total assets from total liabilities, we are going to arrive at our cash on hand or cash at bank, as the case may be. Then the difference between total assets and total liabilities will now be our cash balance at the end of a particular period. For instance, if the sum of assets except cash is 9 million naira and the sum of liabilities is 10 million naira, as liabilities minus assets, that is 10 million naira minus 9 million naira, will give us 100,000 naira. I hope we understand that. Now, 2. All right, let us continue. In conclusion, the ability to gather and present information above will affect your tourism business feasibility and viability. That is, those information on those elements that must be presented in a feasibility report. And if for any reason you do not want to cover all aspects of that feasibility report, you should at least pay attention to the following: a market forecast, that is sales forecast, a market plan, a cash flow budget, and projected income statement. Very, very important. Thank you. Till we meet next time, I remain your presenter, Olukemi Fagolu. Have a nice day.